Welcome to TradeTheMBI.com. This is John. This report is for the 25th, and well, the continued acceleration of Magenta was just enough to hold on barely, but as we can see, the pre-market already beginning to fade, and we continue to see shorts adding into this setup, even though we've got the move from the shakeout coming up off the negative. But when you get that deep, usually you get the pop up and then it rolls over one more time. You can already see we're almost near positive extremes, and you're only at 38% and dropping. So, there's still the headwinds that exist, haven't changed yet. Uh, we can see from a DOC on the NASDAQ here, critical meet point between cyan and green midterm buyers. So rejection here is critical for shorts, and for longs, the crossing of green over to cyan in order to maintain the move upward. You can see that we're dipped back below negative 13, the positive 13.5. So that was where it was coming from before, and now dipping down. So short-term buyer fade is going to need to be picked up by your long-term midterm buyers, and that's what's going to be needed to hold things together. Otherwise, we're likely to pop up and move across a little bit. But, again, it becomes critical here that magenta not fade. And the fact that red separation, strongly above magenta at this particular point is that warning sign. So not particularly strong, but it certainly can be overcome by bulls, but they're going to have to show up in large form. And the bond market here breaking down momentarily here below the 0%. That will be interesting to see how it plays out during the day, because as I've said, if rates start to get closer to where they should be, uh, it's going to be trouble for equities. And that really becomes the question of when the bond market just realizes that the Fed is not able to do anything. And that becomes a critical juncture. And of course, oil plays a key role in this. Rather neutral at this particular stage, with soft readings, MBI leading here, but still magenta over yellow, so likely to just continue to trade in that range. But again, any world event, and that certainly can create havoc. The euro, very excited by the eurozone's growth, with the potential that they were going to cut rates would have been even bigger negative for the euro. So now that seems less likely, and that's net positive for them. Of course, if oil rises, throws that out the window regardless. From a gold standpoint, still holding on even despite the relative negative reading in general, but it was just filling back some of these positive extremes that we had going back from that first run right there. It does have some further ones, but maybe a little too early to expect gold to fade anymore from this particular stage. Bitcoin, for its standpoint, soft. Not too surprising. Of course, you have the halving coming up. That's going to have an impact on miners and how that works and where things are out. It's going to become expensive for power use in order to mine, depending on where you are in the world and what kind of power you're getting. But it makes it difficult. I think, well, in Italy here, 45 cents a kilowatt hour, staggeringly expensive, highest in the world actually. And I think California comes in just a little bit behind. But of course, these are the interesting things: policies that don't promote a whole lot of growth from an ETH standpoint, also soft. And that has nothing to do with crypto in general. It has to do with just general economic activity. Energy always makes the machine go around. And when you had cheaper energy, a few years back, you saw what it did for the economy and small business, and that it's not so much impacted by larger business because they get breaks and subsidies, so it's not as huge an impact. But you can see here from the 50K, so we had a couple of singular positive extremes, even going back to right here, this candle. So we just filled those in yesterday. And the very beginning of it, you have this one, but sort of had a fillback already with that. It's not as critical, but this particular stage, white leading, magenta falling. If there's a break down towards 50% below, it's going to continue. It's not going to hold that support. So it becomes critical at this particular stage that bulls defend this 50% range, because otherwise, you're heading down. And that's just the reality of it. Intraday, Yeah, it was pretty clean. We started out with a little bit of positivity, and that faded fast. And you can see that went down, and as soon as all that put gamma jumped in there, uh, yeah, they flipped them around to eat that up, and then call buyers jumped in and they sucked it out of them as well. And yeah, that's the beauty of it. You just have to be able to see that. It was pretty clear for us from a chart reading standpoint, and here we can see in the pre-market a little bit of back and forth, so it's kind of mean reversion at this particular stage. All fairly clean action and good ranges, so it's a pretty good time. Of course, there's the old adage, sell in May, go away. We'll see if that persists. Of course, some people are going to think there are a lot of opportunities, especially with um, corporate buyback window opening up again. So we'll see if they've got the resources to be able to do that, or if they're going to have to hedge to protect against what we're seeing across the board as softer earnings from a lot of them. As the inflation finally starts to take effect, they had that boom where they were selling products at much higher prices before they had their replacement cost. Now you're caught into the replacement cost much higher, and that starts to squeeze margins, and that's just the basic economics of it. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.